Question 1. A grading contract pays $4.50 per cubic yard of soil excavated, with the final quantity measured in the field. This is is it a unit price contract? B. Lump sum contract. C. Cost plus contract. D. Guaranteed maximum price contract? The correct answer is A. A unit price contract sets a price per unit of work, per cubic yard, per linear foot, etc. The total contract value depends on the actual measured quantities completed. Question 2. A guaranteed maximum price, GMP, contract protects the owner because, is it A, the contractor must finish in half the normal time? B. The owner will not pay more than the agreed ceiling, even if actual costs exceed it. C. The owner pays a flat fee with no cost reporting. D. All subcontractors must be bonded? The correct answer is B. In a GMP contract, costs are reimbursed up to a negotiated ceiling. Any cost overrun above the cap is borne by the contractor, capping the owner's financial exposure. Question 3. A contractor's direct job costs are $80,000 and the contract sells for $100,000. What is the gross margin percentage on this job? Is it A, 20%? B, 25%? C, 80%? D, 125%? The correct answer is A. Margin is gross profit divided by the selling price. Profit is $100,000 to $80,000 equals $20,000. $20,000/$100,000 equals 20% margin. Markup, by contrast, divides profit by cost. $20,000/$80,000 equals 25%. Question 4. A contractor wants a 30% markup on a job whose costs are $50,000. What selling price should the contractor bid? Is it A, $53,000? B, $60,000? C, $65,000? D, $71,400? The correct answer is C. Markup is added to cost. Selling price equals cost x, 1 plus markup, equals $50,000 x 1.30 equals $65,000. The $15,000 difference is the gross profit on the job. Question 5. A contractor needs a 25% gross margin on a job. If the direct costs are $30,000, what selling price achieves that margin? Is it A, $37,500? B, $40,000? C, $45,000? D, $24,000? The correct answer is B. To find the price for a desired margin, divide cost by 1 margin $30,000 1 to 0.25 equals $30,000 0.75 equals $40,000. The $10,000 profit is 25% of the $40,000 price. Question 6. A bid includes $60,000 in labor and materials, $12,000 in overhead, and the contractor wants $8,000 profit. What is the total bid price? Is it A, $60,000? B, $68,000? C, $72,000? D, $80,000? The correct answer is D. The bid price equals direct costs plus overhead plus profit. $60,000 plus $12,000 plus $8,000 equals $80,000. Overhead and profit must both be added on top of direct job costs. Question 7. A contractor's annual overhead is $120,000 and projected annual direct job costs are $600,000. What overhead rate should be applied to each job's direct costs? Is it A, 20%? B, 16.7%? C, 5%? D, 50%? The correct answer is A. The overhead rate is total overhead divided by total direct costs. $120,000/$600,000 equals 0.20, or 20%. Each job is marked up 20% of its direct costs to recover overhead. Question 8. A contractor's fixed overhead is $90,000 per year and the average gross profit margin on jobs is 30%. How much sales revenue is needed to break even on overhead? Is it A, $90,000? B, $117,000? C, $300,000? D, $270,000? The correct answer is C. Break-even sales equals fixed overhead divided by gross margin. $90,000/0.30 equals $300,000. At $300,000 in sales, the 30% margin produces exactly $90,000 to cover overhead. Question 9. A contractor adds a 5% contingency to a job estimated at $200,000 in direct costs. How much money does the contingency add to the estimate? Is it A, $1,000? B, $10,000? C, $20,000? D, $50,000? The correct answer is B. A contingency is a percentage of estimated cost set aside for unforeseen conditions. 5% x $200,000 equals $10,000. It cushions the budget against surprises without inflating the base estimate. Question 10. On a project with a $250,000 contract, the owner withholds 10% retention from each progress payment. After $150,000 of work has been billed and approved, how much retention has been withheld so far? Is it A, $1,500? B, $10,000? C, $15,000? D, $25,000? The correct answer is C. Retention is withheld as a percentage of the work billed to date. 10% x $150,000 equals $15,000. Retention is released after satisfactory completion, typically tied to project acceptance. Question 11. On a private works project, after the owner pays the general contractor a progress payment, the general contractor must pay each subcontractor its share within how many days? Is it A, 7 days? B, 14 days? C, 21 days? D, 45 days? The correct answer is A. Under California prompt payment law, a direct contractor on a private project must pay each subcontractor its portion within 7 days of receiving a progress payment from the owner. Question 12. If an owner wrongfully withholds an undisputed progress payment from a general contractor, California prompt payment law allows a penalty of, is it A, loss of the contractor's license? B, triple the contract price? C, 2% per month on the improperly withheld amount, plus attorney's fees? D, no penalty, the contractor can only sue for the principal? The correct answer is C. California prompt payment statutes impose a penalty of 2% per month, in lieu of interest, on amounts wrongfully withheld, and the prevailing party in an enforcement action may recover attorney's fees and costs. Question 13. After a project is satisfactorily completed and accepted on a private works job, the owner must release retention to the general contractor within, is it A, 7 days? B, 10 days? C, 30 days? D, 45 days? The correct answer is D. On private works, an owner must release retention proceeds withheld from a direct contractor within 45 days after completion of the work of improvement. Question 14. After receiving retention from the owner, a general contractor on a private works project must pass through each subcontractor's retention within, is it A, 10 days? B, 30 days? C, 45 days? D, 60 days? The correct answer is A. Once the general contractor receives retention from the owner, it must release each subcontractor's share of that retention within 10 days on a private works project. Question 15. In a construction contract, a schedule of values is best described as, is it a breakdown of the contract price allocated among the parts of the work, used to support progress billings? B. A list of every employee's hourly wage. C. The contractor's overhead allocation worksheet. D. A calendar showing inspection dates? The correct answer is A. A schedule of values divides the total contract sum among the various components of the work. Each progress payment application bills the percentage complete of each line item against this schedule. Question 16. On a $500,000 contract, the schedule of values shows framing as 18% of the total. If framing is 50% complete, how much may the contractor bill for framing this period? Is it A. $25,000? B. $45,000? C. $90,000? D. $250,000? The correct answer is B. Framing's total value is 18% x $500,000 equals $90,000. At 50% complete, the contractor may bill 50% x $90,000 equals $45,000 for that line item this period. Question 17. A contractor completes $80,000 of work in a billing period. The contract provides for 10% retention. How much should the contractor expect to receive for this progress payment? Is it A. $80,000? B. $8,000? C. $88,000? D. $72,000? The correct answer is D. The owner withholds 10% retention. $80,000 x 10% equals $8,000 retained, so the current payment is $80,000 to $8,000 equals $72,000. The $8,000 retention is paid later upon completion. Question 18. The primary purpose of job costing during a project is to, is it A. Compare actual costs to the estimate so problems can be caught and corrected early? B. Determine the contractor's annual income tax. C. Set the wage rates for the next project. D. Replace the need for a written contract? The correct answer is A. Job costing tracks actual labor, material, and other costs against the budget line by line, allowing the contractor to identify overruns early and take corrective action before losses grow. Question 19. A job was estimated at $40,000 in labor, but actual labor came in at $48,000. This $8,000 difference is best described as, is it A. Cost overrun, unfavorable variance? B. A contingency allowance? C. A retention amount? D. Liquidated damages? The correct answer is A. When actual cost exceeds the estimate, the shortfall is a cost overrun, also called an unfavorable variance. Job costing flags such variances so the contractor can investigate the cause. Question 20. When a general contractor relies on a subcontractor's bid to prepare its prime bid, the sub generally, is it A. May freely withdraw the bid for any reason after the prime is awarded? B. May be bound to honor that bid under the doctrine of detrimental reliance? C. Must be paid a deposit before submitting the bid? D. Automatically becomes a partner of the general contractor? The correct answer is B. When a general reasonably and foreseeably relies on a sub's bid in submitting its own, the sub can be held to that bid under promissory estoppel, detrimental reliance, even without a signed contract. Question 21. The practice of a general contractor revealing one subcontractor's bid to a competitor to obtain a lower price is called, is it A. Bid shopping? B. Value engineering? C. Scope review? D. Pre-qualification? The correct answer is A. Bid shopping is using one sub's quoted price to pressure other subs to bid lower after bids are submitted. It is widely viewed as unethical and is restricted on public works to protect competitive bidding. Question 22. A contractor discovers a $20,000 arithmetic error in its bid 1 hour after submitting it, before any contract is signed. The contractor's best course of action is to, sign the contract anyway and absorb the loss silently. B. Promptly notify the owner in writing of the mistake and request to withdraw or correct the bid. C. Sign the contract and reduce the quality of materials to recover the error. D. Ignore it because bids cannot be changed once submitted. The correct answer is B. A genuine, promptly disclosed clerical or arithmetic error generally allows a bidder to withdraw or correct the bid before contract formation. Proceeding with deficient work or hidden corner cutting would violate license law. Question 23. In project organization, the document that defines exactly what work is and is not included in a contract is the A. Punch list. B. Lien release. C. Certificate of occupancy. D. Scope of work. The correct answer is D. The scope of work spells out the specific work the contractor will perform. A clear scope prevents disputes over whether a task is included in the contract price or is extra work requiring a change order. Question 24. A punch list near the end of a project is it a list of minor incomplete or corrective items to finish before final acceptance? B. A list of materials still to be ordered. C. The contractor's payroll records. D. A schedule of future projects? The correct answer is A. A punch list itemizes minor defects or unfinished details that must be completed or corrected before the owner gives final acceptance and releases final payment and retention. Question 25. Substantial completion of a construction project generally means, is it A. All materials have been ordered? B. The contract has been signed by both parties. C. Exactly 90% of the contract price has been paid. D. The project is complete enough for the owner to use it for its intended purpose? The correct answer is D. Substantial completion is reached when the work is sufficiently complete that the owner can occupy or use the project for its intended purpose, even if minor punch list items remain. Question 26. A liquidated damages clause in a construction contract will most likely be unenforceable if, is it A. The stated amount bears no reasonable relationship to anticipated harm and operates as a penalty. B. The amount is a reasonable forecast of the owner's likely loss. C. Actual damages would have been hard to calculate at signing. D. Both parties negotiated the clause at arm's length? The correct answer is A. Under Civil Code Section 1671, liquidated damages must be a reasonable estimate of probable harm. A clause set arbitrarily high to punish, with no relation to actual anticipated loss, is an unenforceable penalty. Question 27. A contract sets liquidated damages of $400 per day for late completion. The contractor finishes 12 days late. Assuming the clause is enforceable, how much may the owner deduct? Is it A. $400? B. $4,800? C. $1,200? D. $12,000? The correct answer is B. Liquidated damages accrue per day of delay. $400 x 12 days equals $4,800. An enforceable clause fixes this amount in advance, so actual damages need not be separately proven. Question 28. Under California's Right to Repair Act, SB 800, the statutory standard for plumbing and electrical system defects in new residential construction generally applies for, is it A. 1 year? B. 2 years? C. 4 years? D. 10 years? The correct answer is C. SB 800 establishes tiered standards. Most function/finish items 1 year, plumbing and electrical systems generally 4 years, and structural/major defects up to 10 years from close of escrow. Question 29. Under SB 800, the longest statutory standard period applies to which type of defect in new residential construction? Is it A. Paint and stucco finishes? B. Interior trim work? C. Major structural components. D. Cabinet hardware? The correct answer is C. The 10-year period under SB 800 applies to major structural defects. Finish and function items such as paint, trim, and hardware carry much shorter standard periods, often 1 year. Question 30. Under SB 800, before a homeowner may file a construction defect lawsuit against the builder, the homeowner generally must first, is it A, sell the home to a new owner? B, obtain a new building permit? C, wait 10 years after close of escrow? D, give the builder written notice of the claimed defect and an opportunity to inspect and repair? The correct answer is D. SB 800 establishes a pre-litigation process. The homeowner must notify the builder of the claimed violation, and the builder has the right to inspect and offer to repair before a lawsuit may proceed. Question 31. A home improvement contract states the contract price as to be determined with no total dollar amount. This contract is it A, fully valid as long as the homeowner signs it? B, valid only for emergency repairs? C, valid if the contractor is bonded? D, improper, because the contract must state the total contract price on its face? The correct answer is D. A home improvement contract must clearly state the total contract price in dollars. An open-ended or undetermined price deprives the consumer of a key disclosure and violates the contract requirements. Question 32. In a cost-plus contract, the party who bears the most risk of cost overruns is it A, owner? B, subcontractor? C, contractor? D, material supplier? The correct answer is A. Under cost-plus, the contractor is reimbursed for actual costs plus a fee, so cost increases are passed through to the owner. The owner therefore bears the bulk of the cost overrun risk. Question 33. A contractor signs a $700 repair contract with a homeowner. Which statement is correct? Is it A, no written contract is needed because it is under $1,000? B, the contract may be entirely verbal if both parties agree? C, a written contract is required only if the homeowner is a senior citizen? D, a written home improvement contract is required because the price is $500 or more? The correct answer is D. California requires a written home improvement contract whenever the combined labor and material price is $500 or more. A $700 repair clearly exceeds the threshold and must be in writing. Question 34. A contractor's bid totals $90,000, of which $54,000 is direct cost. What percentage of the bid is gross profit and overhead combined? Is it A, 40%? B, 60%? C, 20%? D, 166%? The correct answer is A. The amount above direct cost is $90,000 to $54,000 equals $36,000. As a percentage of the bid, $36,000/$90,000 equals 40%, which covers both overhead and profit. Question 35. A contractor estimates a job will take 320 labor hours at a fully burdened rate of $55 per hour. What is the estimated labor cost? Is it A, $5,818? B, $17,600? C, $1,760? D, $176,000? The correct answer is B. Estimated labor cost equals hours times the burdened hourly rate. 320 x $55 equals $17,600. The burdened rate already includes payroll taxes, insurance, and benefits. Question 36. 3 contractors submit sealed bids of $182,000, $176,500, and $189,300 for the same defined scope. The lowest responsive bid is it A, $176,500? B. $189,300. C. $182,000. D. The average of the three bids? The correct answer is A. Competitive bidding awards the contract to the lowest responsible and responsive bidder. Among $182,000, $176,500, and $189,300, the lowest is $176,500. Question 37. A general contractor uses a critical path method, CPM, schedule mainly to, is it A. Calculate sales tax on materials. B. Determine the home improvement down payment limit. C. Identify the sequence of activities that controls the project completion date. D. Decide which subcontractor to bid shop. The correct answer is C. A CPM schedule maps task dependencies and durations to find the critical path, the longest chain of activities that determines the minimum project duration and the completion date. Question 38. On a fixed-price contract, the contractor's estimate was $100,000 but actual costs reached $112,000. The owner still pays only the agreed price. The contractor's profit or loss is it A. A $12,000 profit? B. A $12,000 loss? C. Break even, no profit or loss? D. Determined later by the owner? The correct answer is B. In a fixed-price contract, the price is locked. With costs of $112,000 and revenue of $100,000, the contractor absorbs a $12,000 loss. Cost risk falls entirely on the contractor. Question 39. If a contractor performs home improvement work without a written contract or with a non-compliant contract, the most likely consequence is it A. License discipline by the CSLB and difficulty enforcing payment? B. The contract is automatically converted to a public works contract? C. The homeowner must pay double the contract price? D. The CSLB issues the contractor a higher license class? The correct answer is A. Failure to use a compliant written home improvement contract is grounds for CSLB discipline and can make it difficult or impossible for the contractor to enforce payment in court. Question 40. An owner asks a contractor to add an unforeseen scope of work mid-project. To be paid for the extra work, the contractor should first, is it A. Get a written, signed change order describing the added work and its price before performing it? B. Complete the extra work and bill it on the final invoice as a surprise? C. Stop all work until the owner pays cash up front? D. Report the owner to the CSLB? The correct answer is A. Extra or changed work should be authorized by a written change order signed by both parties before it is performed, so the price and scope are clear and the contractor's right to payment is protected. Question 41. California prompt payment laws are designed primarily to, is it A. Set the minimum wage for construction workers? B. Determine which contractor wins a competitive bid? C. Ensure that contractors, subcontractors, and suppliers are paid in a timely manner? D. Establish license classifications? The correct answer is C. Prompt payment statutes set deadlines for owners, general contractors, and others to pay down the contracting chain, with penalties for late payment, so that everyone who performs work is paid timely. Question 42. A contractor wishes to require a larger down payment than the law allows because a custom-ordered material must be paid for upfront. The proper way to handle this is to, is it A. Simply collect 50% down and note it as custom materials? B. Have the homeowner waive the down payment limit in writing? C. Use a separate finance charge or special order provision allowed by law, not an unlawful oversized down payment? D. Collect the full contract price before ordering anything? The correct answer is C. The down payment cap, $1,000 or 10%, whichever is less, cannot be waived by the homeowner. Special order or custom material costs must be handled through lawful contract provisions, not an oversized down payment. Question 43. A contractor's overhead is best described as, is it A, the direct labor and materials used on a specific job? B, indirect business costs, office rent, insurance, administration not charged to one specific job? C, the profit earned on the most recent job? D, the amount of retention withheld by the owner? The correct answer is B. Overhead consists of indirect costs of running the business, office, insurance, licenses, administrative salaries, that benefit all jobs and must be recovered through markup on direct costs. Question 44. On a home improvement contract, the start date and completion date provisions exist primarily to, is it A, allow the contractor to set the price after work begins? B, replace the need for building permits? C, determine the contractor's license class? D, give the homeowner a clear, enforceable expectation of the project timeline? The correct answer is D, required start and completion, or duration. Dates give the homeowner a clear timeline, support enforcement if the contractor delays, and help establish whether abandonment has occurred. Question 45. Which item is generally considered a direct job cost rather than overhead? Is it A, the contractor's office telephone bill? B, annual liability insurance premium? C, the salary of the company bookkeeper? D, lumber installed on a specific framing job? The correct answer is D, direct costs are traceable to a specific job, like lumber, job site labor, and equipment rental for that job. Office phone, general insurance, and bookkeeper salary are indirect overhead. Question 46. A contractor marks up direct costs by 35%. If the markup amount on a job is $14,000, what were the direct costs? Is it A, $40,000? B, $49,000? C, $4,900? D, $54,000? The correct answer is A, markup amount equals direct cost times the markup rate. $14,000 equals cost x 0.35, so cost equals $14,000 slash 0.35 equals $40,000. The selling price would be $54,000. Question 47. On a unit price paving contract at $3.20 per square foot, the field measures 9,500 square feet actually paved. What is the contractor entitled to be paid? Is it A, $3.20? B, $30,400? C, $9,500? D, $3,040? The correct answer is B. Under a unit price contract, payment equals the unit price times the measured quantity. $3.20 x 9,500 square feet equals $30,400. Question 48. A contractor finishes substantially all work on a private project and submits a proper final invoice for $30,000, the retention. The owner refuses to pay although there is no genuine dispute. The contractor's best first step is to, is it A, re-enter the property and remove installed materials? B, immediately surrender its contractor license? C, lower the invoice by 50% to encourage payment? D, send a written demand for the retention and, if unpaid, pursue prompt payment remedies and lien/bond rights? The correct answer is D. Where there is no good faith dispute, the contractor should make a written demand and then enforce its rights through prompt payment penalties and mechanics lien or bond claims. Self-help removal of materials is unlawful. Question 49. An IA-style application and certificate for payment, commonly G702/G703, is used to, is it A, cancel a home improvement contract? B, apply for a contractor's license? C, request a progress payment showing work completed against the schedule of values? D, record a mechanics lien with the county? The correct answer is C. The G702 application/certificate with its G703 continuation sheet itemizes the schedule of values and percentage of each item completed, supporting the contractor's request for a progress payment. Question 50. A contractor budgets a job at $250,000 total cost and is 60% complete. To stay on budget, total spending to date should be approximately, is it A, $60,000, B, $150,000, C, $250,000, D, $100,000? The correct answer is B. If progress and spending track together, spending at 60% complete should be about 60% of the $250,000 budget. 0.60x $250,000 equals $150,000. Spending much above this signals a possible overrun.